All right. Holiday weekend is over. Time to get back to work, guys and gals. Hope you guys had a fantastic holiday break. But it's time to get back in the action tonight here. It's Tuesday evening, after all. It's October 13th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's trading session. I've got a pretty good video in store for you guys and gals tonight. Charts are all prepped up in the background, as you can see. Got the Eminis, we got the oil, and of course we got the gold, that yellow metal, on our radar for tomorrow. Speaking of tomorrow, boy, what a week we have in front of us. The third week of the month, earnings season. Monday was a holiday. We got that snapback trade set up. Boy, lot to cover tonight on this video newsletter. And of course, before we jump in and get our hands dirty on these charts tonight, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you don't miss all the good stuff we publish every evening on this video newsletter. And don't forget, if you have any questions for me at all, right, any questions, drop those questions in the comment section below. And as always, if you love this video, if you enjoy the content, if you like this content as much as I enjoy making it for you, always appreciate you guys hitting that thumbs up button for me here on this nightly newsletter. So again, subscribe. I don't want you to miss all the good stuff we publish every evening. Drop those questions in the comment section and thumbs up if you guys enjoyed the video tonight here on this nightly newsletter. But enough of the introduction. Time is ticking. I'm a little bit behind schedule. First day back after a holiday break. Let's kick off this nightly newsletter tomorrow with the calendar for tomorrow. Taking a look here at the schedule for tomorrow's trading session. Now, what do we have here? Well, third week of the month. That is, of course, some of the big picture stuff. First of all, cover the big picture stuff here for this week, right? Third week of the month. That means Friday is OPEX. Now, that won't start to affect us probably till Thursday and Friday. What you want to remember is as we go into options expiration at the end of this week, right? Remember, options expire on Saturday morning. So end of the day on Friday. The futures markets are a very popular tool to hedge positions, right, that may be expiring in the options market. So third week of the month, third Friday is this Friday. Do expect to see increased volatility. We also have earnings season that began here this week. We've got next couple of weeks, we'll have some of the biggest companies on the New York Stock Exchange, on the NASDAQ, on the Russell. They'll all start reporting earnings. So again, as we go into the end of the week, I would anticipate that to lead to increased volatility. So volatility should begin to pick up steam here as we go into the latter half of this week, right? Specifically Thursday and Friday as we go into options expiration. Also, speaking of Thursday and Friday, around the we got the 15th and 16th. Usually around the 15th of the month, I always start watching for oil rollover. So if you're an oil trader like we are in our trade room, you want to be keeping an eye on the volume. Now, remember, right now, we're on the 1120 contract for crude oil. We're watching the volume here on the 1220 contract for crude oil right now. It's getting surprisingly close, being on the 13th of the month. If I go in and look at the oil price right now, if I look at this, courtesy of NinjaTrader, you'll notice here, we're surprisingly close here as far as those two volume, right? The volume count goes. The 1120 contract is definitely still in the lead, but once that 1220 contract exceeds the 1120 contract, we do want to be watching for crude oil rollover. Now, we shouldn't have to worry about rollover on any other markets, but again, if you're an oil trader, you definitely want to be watching for that volume rollover as we get, it might be tomorrow, but it's probably going to be closer to Thursday or Friday, if not early next week. Again, it looks pretty close there right now. So maybe tomorrow, but more likely probably Thursday or Friday. But watch out for oil rollover here. And then one more here, Thursday and Friday. You'll notice a little headline there, the EU Leaders Summit. Now, we trade the U.S. session in our trade room, but if you are trading the overnight London or Asian session, you do want to be aware of that, right? Those EU, the the EU or the ECB Leaders Summit. The big topic right now is the Brexit negotiations, right? You got France, you got UK, and I want to say Spain was kicking in there as well. Sorry, Germany, excuse me. I apologize if I missed a couple countries there, but there's that negotiation going on right now. As an American, right, I'm a little bit further removed from it, but we got the kind of the main topic, right, of the EU summit here this week is going to be that Brexit negotiation. So if you're in Europe, again, we trade the U.S. morning session in our trade room, so we're a little bit insulated from this stuff in the U.S. session. But if you are in Asia, if you are in Europe, if you're trading that London session from 3 a.m. to 7 a.m. Eastern time, you definitely do want to be aware of that Leaders Summit, the EU summit later on this week. So as you can see, a lot of reasons why volatility should kick up a little bit, right? We got rollover, we got the EU summit. We've got, of course, earnings season, and we've got OPEX all on Friday. So definitely expecting an increase of volatility. Now, looking at the specific news events that we have here for the rest of the week. Now, remember, Monday was a holiday, which means most of our popular news events are going to be pushed back 24 to 48 hours. Tomorrow's a pretty good example of that. We usually see inventories for crude oil on Wednesdays. They've pushed that back now to Thursday at 11 o'clock Eastern time. So a good example, right? We usually get that inventory report at 10:30 on Wednesdays. Because Monday was a holiday, though, it's been pushed back here by 24 hours. So to make a long story short, be aware, not all the same news events will always be the same time of the week this week. But you can see tomorrow, though, the big news here tomorrow is that PPI number. Anytime I see PPI, CPI, right, these are always going to be big, potentially market-moving events. PPI definitely makes me think about inflation. Inflation makes me think about currencies, gold, right? So definitely there are going to be some big market-moving events, right, tomorrow regarding any currencies, right, especially gold, anything tied to the dollar tomorrow. We'll definitely be watching the 8:30 news report, that PPI number at 8:30 Eastern time. That is the big news for tomorrow. And again, you won't have the oil inventories tomorrow. That won't be until Thursday. As we look at Thursday's trading session, Thursday is usually the big day whenever Monday is a holiday. Usually things get kind of pushed back to Thursday. And Thursday will definitely not disappoint. You'll notice we got jobless claims and Philly Fed at 8:30 on Thursday. We've got, of course, some Empire State Manufacturing also at 8:30. But the big number, though, will be that jobless claims report at 8:30 on Thursday, followed by the 11 o'clock crude oil inventory report, also known as the petroleum status report, at 11 o'clock Eastern time. And then wrapping things up, boy, a bunch of news on Friday this week. We got retail sales at 8:30, industrial production at 9:15, consumer sentiment at 10. So a peppering of news on Friday to finish up a short week in the markets. So tomorrow morning, PPI number 8:30 Eastern time, perfect timing. As always, we'll open up our trade room every morning, Monday through Friday at 8 o'clock Eastern time. I would love to have you there, right there with me. We'll go to battle together tomorrow morning, find the best setups together. What I'll do is I'll put a link in the description of this YouTube video. Grab that link for me. Get registered for tomorrow morning's trade room session every morning, Monday through Friday, 8 a.m. Eastern time, Monday through Friday, right in our trade room. I would love to see you there. And again, I'll put all the important membership links for you guys in the description of this YouTube video. So be aware, volatility should kick up. Watch rollover, right, for oil. And we'll definitely keep our eyes on earnings season as it unfolds. Let's keep this party going. Lot to cover here tonight on the charts. We got the S&P, we got the crude oil, and of course we got the gold. Now gold is a relatively straightforward market today. It's a straight line down into a trading range, a spike and range pattern on the gold. Pretty straightforward plan. I got three pretty easy patterns I'm watching for here on the gold. We'll grab that here in a moment. Oil might be the more challenging of all three of these tonight. Oil was a bull market up. Maybe it's a range, maybe it's a channel. My biggest problem on oil right now is this rotation off the high. If you're an oil trader, or really if you want to learn a better way to trade ranges, you definitely want to stay tuned for the crude oil review here tonight. Get a big setup off the low of that channel for the pendulum swing on oil. And how about the S&P? Boy, S&P had that big spike up on Monday, right? Monday was a holiday. Markets were open on Monday, but on low volume, right? One of those half holidays, and we kind of grind our way back. Now, the S&P is kind of suffering from what we call the snapback right now. Let's talk about that here in more detail. Let's talk about what I mean when I say snapback. Well, in order to understand the snapback, what you have to first understand is Monday was a holiday. Now, Monday, we kind of called these kind of half holidays in the financial markets because the banks were closed, the kids were out of school, right? There probably was a parade going down Main Street in a lot of towns around the U.S. and probably other countries as well, but the markets were open. And usually that's not the case, right? Usually when there's a holiday, right? Banks are closed, right? Schools, kids are out of school. Usually the markets are going to be closed. Now, there's a couple of these that happen every week, right? I believe, or every year. Columbus Day, of course, was on Monday. Martin Luther King Jr. holiday, which I apologize, I can't recall. President's Day, right there. I can't recall when they are exactly, but those are some examples of kind of half holidays, right? Where the markets are technically open, but no one's really paying attention. Now, what happens a lot of times is because the market is open, but nobody's really paying attention to it, right? Most of us are taking that long weekend. We get a lot of times these big, strong moves. And ultimately what happens is the markets then open up the following day and traders reject those higher prices or lower prices. It's not just a move higher. It could be a move higher or it could be a move lower. Again, what happens is there's a holiday, not a lot of volume, not a lot of eyeballs, and because of that, the markets do tend to move, right? Not exactly tradable moves, but they do tend to have these relatively big and very, kind of illiquid moves here. Then the market opens up the following day, everybody comes back to work now, and they say, wait a second, I don't want to buy way up here, right? I want to buy where we started. I want to trade where we left off last week. And so what ends up happening a lot of times, and we talked about this in our trade room today, a lot of times you'll get these big moves over the, quote unquote, half holiday, right? It's a holiday, but the markets are technically still open. And what ends up happening is the markets reject these higher or lower price. In this case, it's a higher price. And we end up getting what is usually a pretty violent pullback. This one's been kind of a grinder, but it's almost like there's a big gap to fill, right? It's almost like it's a gap they're trying to fill, kind of go back to where they came from and then get back after it from there. You know what I mean? It's all, and again, I kind of call it the snap back because we oftentimes see these, right? Again, the opening price here, market runs up on low volume. We come in the next day and people go, well, I don't want to trade up here. And the market grinds lower. Once they get that, again, gap fill or snap back, then the market says, okay, now we can go back up. Now we can go back up, right? And do some work here and go back up to retest those highs. So think about that low volume half holiday session. What does the market need to do to get back to kind of where it left off, right, from last week, and then we kind of get back to business from there. Again, I kind of nickname it the snapback. You could also call it the holiday gap if you wanted to, right? It's not really a gap. In this case, we do have a weekend gap. The difference there between Friday's closing price, last Friday's closing price, and Sunday's open. So we do actually have a weekend gap on this chart, 76.5 there. And I'll leave that gap there. That'll be a magnet for price here for the rest of the week. So we're definitely anticipating, and you'll see examples of this on gold, right? Gold and crude oil already came back to reach theirs. But you'll see an example where the market will try to get down to that area, and then most likely we'll start to see this market start to regroup and get back up to moving up towards those highs here. That's the overall idea on this S&P. Now, I think it's pretty easy to see here we're bearish. I don't think anybody looks at this and says this is a bull market. It's definitely bearish. We've had a couple strong jumps off the moving average here today. I don't really look at this as a flag. You could almost, if it was a little bit earlier in the day, you might think it was a flag, right? Big bull move up, right, into a bear channel down. Okay, I would definitely agree it's a flag here, but it's too late now, right? It's too late now. buyers had a chance, buyers had a chance, buyers had a chance. They're not getting anywhere. This is definitely not a flag pattern. It's a bear market. It's a trending environment, which means I definitely want to be selling. I want to be selling at a level of resistance. And I have to assume, based on what I said earlier, right, the kind of the holiday gap, the snap back, right, things like that. I have to assume they're trying to go back to retest that 76.5 area. And then we may see the rebound, right? We may see it run all the way down and then rebound and make it move back up, right? That's what usually happens. We usually see it kind of take back or snap back that Monday move, and then we can kind of get back on, right, to business from there. So knowing that, I'd like to find some levels of resistance that I could sell, right? Unfortunately, they didn't really give me a very good channel to use here. You'll notice that channel, of course, I've got drawn in. So my next best thing, you can kind of tell they're probably sitting around this round number here at 3,500. There are really kind of two spots or two patterns that I'm looking for specifically here on the S&P. You'll notice I marked up this range. Now, what is a range? A range is a magnet, right? Ranges are magnets. What I'm hoping is, if I have it my way, I'd like to see us get up towards that magnet and see if I can catch some buyers trying to get aggressive here. I'd love to see this thing go up above the top of the range. I have a bunch of resistance levels here, including the underbelly of that range here. Get up above the top of that channel, get into some of these areas of resistance, and once we do, hopefully buyers will confuse this as a bull market. They'll try to buy the pullback. Once they do, then I know exactly where their stops are. I can look to sell into stop losses. I can also look to sell that pullback as the market rolls over and makes a run. So what I'd really like to get here on the S&P is I'd like to get basically a buyer failure pattern. They'll look a lot like this, right? It'll look like this. It'll go up, it'll pull back, it'll run lower, and then there's your pullback pattern that comes thereafter, right? See this one back over here? Basically same basic idea as we're looking for right here above the high. The key is going to be get up above these highs, get those buyers to try to buy the pullback. We know exactly where their stops are. We can sell into stop losses, and of course we can sell the pullback, right, as we make that run lower. Buyer failure pattern into seller pullback. Target at the retest the low, leave the runner down to that 76.5 area. Now, there's also a chance that we may go sideways around this round number, right? It may go sideways here. Wouldn't be far-fetched to think a big round number could lead to a sideways range. If we do see a range here, and we'll talk a lot more details about these ranges on the gold, because gold's a pretty good example of a spike in range here. But if we do end up going sideways here, I will pretty much keep the same plan. I'm going to look to sell above that range, which will also be above that channel. And of course, it's really very similar pattern. Whenever I have a trading range, I look for breakout failures. I look to go with the direction, right? It's a bear momentum. But really what I hope we'll get is, if the market does want to go sideways here, I'll look for a pop-up. I'll look for buyers to come in and try to get long off the moving average. And again, right, we'll sell into those stop losses. So a sideways market really doesn't change the game plan very much. Another pattern I'm watching for here is if the market makes a nosedive, right? This is definitely possible because, again, we talked about the snapback, right? Filling, quote unquote, filling that holiday gap, right? So how would I trade this as it goes lower? What you want to do is you want to remember there's a channel here. You also want to remember that the best place to sell short is to sell high and sell at resistance. So as the market rolls lower, I have to be very careful selling down here just because I'm not following that simple rule of selling high or selling at resistance. What I'd like to do is, if the market takes off to the downside, what I'll look for is I'll look for what I call a two-try trap pattern. I'll look for a strong move lower, a shallow pullback, a lower low, and a trap above that high. What this does is this pattern allows me to avoid selling low by definition, selling a trap high, selling above a prior high. You are selling as high as you can. And I'm also using that level of resistance overhead, right? Oftentimes, too, there's going to be a hidden channel down here, and so you want to keep an eye out for that hidden channel as well. I call those 2-try trap patterns. So again, there are quite a few opportunities here to get short right now. Either a buyer failure into a seller pullback combination. If we go sideways around this measured move, I'm going to keep very much the same plan. I'll wait for the price to get up. I'll wait for buyers to dig their own grave up there, right? Sell into those stop losses. Or if the market takes off on strength, the downside, look for that, again, shallow pullback, lower low, trap high, right? And look for that short just above those prior highs. And again, targets are back down to retest that gap. Now, if things really start getting crazy out there, there's a lot of open space down here, right? If things start really bleeding, for example, if we just go 1, 2, 3 down, I'll find a new channel. I'll mark that new channel. I'll mark that new high. And we'll sell off that high here. So if things really start to bloodbath on us, right? If things really start to run lower, I will gladly adjust that hidden channel and look for additional sells right off the high of that channel. Last but not least, though, how do we buy this market? Oh, and very good question. A lot of you guys have asked me, where can I learn more about all of these patterns? All of these patterns are covered in our free trading course. If you haven't done so already, you definitely want to grab that free course. I'll put a little pop-up there in the upper right-hand corner. Inside that free course, I talk about failure patterns. I talk about breakout patterns, trap patterns, pullback patterns. You'll learn all my favorite setups and the same setups we use every day in our trade room. So grab that link that popped up there. Get registered for the free course. I'll also send you hundreds of examples of my favorite setups on our favorite futures markets too, that we can see how they work on real markets. The bottom line though is, right, again, grab that link in the upper right hand corner, or again, I'll put all of the important links you guys need in the description of this YouTube video, right? So grab that link in the description, and that way we'll see you in the free trading classes. Now, how do we trade this thing long? Right? How could I buy this market? We really have to be careful being a buyer on this because momentum is so strong. Now, there are really two ways I can buy this. One would be if I can get a real strong rip higher here, right? If the market really jumps up and runs higher, I can call that what I call a 1, 2, 3 reversal pattern, and I can mark up a new channel. I'm going to draw the channel off the highs. I'll bring it down to that low, and I'll look for that long off the low of that channel. Now remember, this requires a very strong punch higher. I'm not going to chase the market as it goes higher. I'm going to stay patient, find my channel, and look for what is usually at the low of these channels is usually a failure into pullback combination setup, just as we talked about earlier, to be a seller, right? So kind of keep that in mind as the market runs higher. Another possible scenario for it to be a buyer would be, let's say they get their holiday gap filled. Let's say they do complete the snapback, and then we see another reversal, right? We see that 1, 2, 3 reversal off that low. I'm not in the business of picking a bottom, that's for sure. I don't want to make that rookie mistake. I made that mistake way too often when I was a new trader. I'm not going to try to pick that bottom down because it's so bearish. Trying to get long, even if it's a support level, what'll happen a lot of times is you'll get run out and then it will go. Right? Trying to pick that bottom is tough. Oftentimes you'll get stopped out by a few ticks just to watch it go without you. So I'm not really in the business of picking bottoms. What I will do though is, assuming we do complete that holiday gap, that weekend gap, I will definitely be open-minded to a 1, 2, 3 reversal pattern. Again, 1, strong move up, 2, pull back to the moving average, 3, strong jump off the moving average. If that's the case here, wonderful. Now the buyer's taking back control. I'll mark up that high. I'll mark up that low, find that new hidden channel as we call it, and we'll look for buys off the low of that hidden channel. But again, that'll have to be after we complete the move down and then get that 1, 2, 3 reversal pattern here. And again, I cover all of these reversal patterns in that free course that I mentioned, linked up in the upper right-hand corner, as well as in the description here on this YouTube video. So what will we get? Will we get a bloodbath? Will it go sideways? Will the market reverse? I got a great plan for this stuff now. Now all we need is a few more candlesticks, right? Give us some more time. Let the market tell us what it wants to do. S&P, we got you on our radar for tomorrow. How about some crude oil? Like I mentioned earlier, crude oil it's probably the most difficult out of all of these markets. One thing's for certain, you can see they already filled their holiday gap on the oil. Right? Remember, this is what's very likely, right? You get that big move down on, again, kind of a half holiday. And what happens is people come in, they go, heck, I don't want to sell down here. So what do? They wait for the price, right, to get back up. And now we may, not a guarantee yet, but we may now see these bears start to take this thing seriously again and look for a retest down around that 39.04 area. So very good example of kind of that snap back, right? Possibly what we're going to see on the S&P for tomorrow. Now, why did I say the oil was the most difficult one? Well, first of all, let me clean this thing up here just a little bit here. I think the reason why this is probably the most difficult one is because of this range. It's not so much the range that is the difficult part. It's the fact that we're what I call rotating off the high of that range. You know, what does a range tell me to do? A bull market, right? A bullish market, a bull market that goes sideways into a trading range, what it tells me to do is it tells me to look for buy setups using seller basically breakout failures below the range, right? Momentum is bullish. I want to buy. The best place to be a buyer is underneath the range, or you can definitely look for a 1, 2, 3 breakout pattern above that range as well. We'll talk more about breakout patterns on the gold chart here in a moment. What I want to make sure I point out though is I want to make sure I point out that yes, I do want to buy below this range. However, there's one big challenge. The challenge is we're not coming from inside the range. We're coming from above the range. And we're basically rotating off the high. Now, that may not seem like a big deal, but the reality is it creates a lot of momentum. The momentum that builds on the way down, I'll tell you, oftentimes it continues and we see a big full-blown reversal, which in a way would make sense for tomorrow, right? Because we had that gap fill. Again, I'm using the term gap in a very, generous way on this. But we had that kind of weekend gap, right? That snapback gap is filled, and now will they roll over and get back to business here? That's why I think this is potential to be the most difficult market for us here tomorrow. So I've got my bull market. I think you can see that pretty easily, right? Bull market up into a trading range. I want to be a buyer underneath this range, but you see, we're rotating off of that high. So as it rotates lower, that's going to be a lot of momentum for the bears. I don't want to trade inside the range. What I want to do is I want to use that range to find my buy zone, right? That buy zone down there, 39.74, 39.50 there, that's our sweet spot. That's where I want to look for my buy setup. I can also measure the amount of the move above the range. I can project that down below the range, and that gives me, as you can see, 39.67, right? That gives me another kind of area of support to look for. On top of that, you can also see I've got my channel on here. Now this channel, it's not the greatest channel in the world, but it definitely does look good enough. I've drawn the channel off the highs, matched it up off the lows, and you can definitely see there is some confluence there. So I do like the way that channel looks. You'll notice that is also in the same spot as well. So it's a bull market. It's into a trading range. I'd like to be a buyer right below this trading range, but my biggest problem again is this momentum. So I've got one specific entry pattern I always like to use whenever I'm concerned about trading against the short-term momentum. Again, there's plenty of bulls in the market right now. I'm not talking long-term momentum or medium-term, you call it, momentum. I'm talking about short-term momentum as the market rolls over, right? What's the best way to buy below the range? Is to look for a breakout, failure, and go back into the range, right? We talked about this earlier on the S&P. The S&P is, the opposite direction, right? Looking to be a seller here. I want to buy underneath that trading range. Problem is, all of that momentum makes me have to wait for what I call a nested failure pattern, a nested entry pattern. So as the market comes down now, what I want to do is anticipate those bears, right? The bears, again, they're trying to retest that low, right? They got their gap fill. They're trying to retest that low. And the problem is we don't have a bear market yet. The market is not it's not a bear market yet. So I have to assume the buyers are waiting down here. I got a lot of momentum. Therefore, let those bears try once. Let them try twice. Once I get those bears wrapping that rope around their neck, right? Literally, once those bears try to get short once, try to get short twice, what happens is you get the shallow pullback sellers, then you get the more conservative, right? The more patient pullback sellers. Once they're all in, now we know where stops are, right? And now I can complete my mission of buying underneath that trading range using, in this case, using the momentum coming off the high, using that as my guide. That's one of the this is one of the most challenging parts about ranges when they're rotating off of that high. Now, you might be wondering, well, what do we do if the market bounces off this trend line? The trend line or the channel low is a very interesting part of this because I'm going to still have to look for that nested, but if we don't pull all the way back, I'm going to have to use a trap entry as well. So this is where location is really important. It's not just for real estate, right? It's also for trading as well. Location is very, very important. If I don't get that deep pullback into that pendulum swing, into that, again, 39, 74, 250 area here. If we don't get that deep pullback, then I've got to look for, again, bears trying once, bears trying twice. Same idea, same nested failure, but nested now with a trap. So these are some nuances. These are some kind of specifics I'm watching for here tomorrow. If it rolls over nice and fat, right? One try, two try, back up in. If we just simply come down and get stuck, one, two, you want that trap because trap patterns will help me buy as low as I can get, right? That's why I'm looking for a trap there. I don't want to trade inside the range. I'll look for traps in combination with bears trying twice to buy below that trading range. Now, at the same time, you can probably already imagine that if the market makes a run lower and they hold that pullback now and roll over, it's on, right? The bears have a beautiful bullseye now down around 39 even, right? 39.04, probably 39 even once it's all said and done. If we do get that 1, 2, 3 reversal pattern, well, by all means, now let's get short. I'm not going to chase after it. I'll look for that low. I'll find that high, and we'll look to get short off of that high. So it's not that I can't sell this market right now. I would love to, but I just simply don't have momentum on my side yet to be a seller. So I'm waiting for that rollover, right? I'm basically waiting for that 1, 2, 3 move so I can get short off the high. Now, every once in a while, what you'll see is the market will just collapse, right? If it collapses, then look for that 2-try trap, right? Strong move down, shallow pullback, lower low in price. If you see that happen, yeah, you know where to look, right? That trap high right above that prior swing. And as always, keep your eyes open for those hidden channels, right? We'll draw off of the lows, we'll find those highs, right? And we'll look for those hidden channels. So those are some sell setups I'm watching for on the other end. Now, there's also potential here too. Get rid of that measured move here for a moment. There's also potential here too. These buyers might get a boost. Again, the bulls have control right now. What would it take for me to want to buy a breakout? What would be some breakout patterns we could use here? There are really 2 breakout patterns I would watch for. One is going to be the 1, 2, 3 breakout. Strong move up, pull back to the moving average, jump off the moving average, right? 1, 2, 3 breakout, mark up that high, mark up that low, and buy the low of that channel. Very, very common, very reliable, and really probably my favorite way to trade a breakout. I'm not a big believer in predicting breakouts, right? I'm not about to predict reversals, and I'm certainly not going to make the assumption that every move higher will be successful, right? Breakouts always look very convincing, don't they? So I want to see proof. Show me a strong move up. Show me a pullback and show me you mean it, right? Show me you mean it. Give me a nice strong jump off the moving average. Once I get that, then I can find my new channel, and I can now look to get, relatively aggressive right off the low of that channel. 1, 2, 3 breakout. Or, as always, there's always potential for a 2-try breakout, and that will be a strong move up. Now, this one, you've got to get a real strong move. I want to see that shallow pullback. It'll barely touch the moving average. Find that, right, that swing low, and we'll buy off of that low, right? So again, 2-try breakout pattern, same idea to the downside, right? Same idea here to the downside. Let those bears try once, let them try twice, trap low, strong move up, shallow pullback, higher high, right? Higher high, and then trap low off of that low. So we got plenty of opportunities here. The one thing you want to be careful of, do we sit inside the range, right? Do we sit inside the range, right? Stay out of that range middle. Buy low, sell high, and of course, wait for those 2 types of breakout patterns. And again, I cover all of these patterns. We'll do them together tomorrow morning in our trade room, of course. But if you're not with me tomorrow morning at the opening bell, if you're not doing it with me tomorrow in the trade room, make sure you grab that link in the upper right-hand corner for the free trading classes. That way, when we work together tomorrow night, you'll know what I mean when I say failure into pullback combination or 2-try breakout pattern. Easy way to learn all my favorite setups as part of that free trading course. All right, let's keep moving this sucker now. Oil looks good. How about some gold? So gold's probably the easiest of all the markets going forward tomorrow, just because there's not a lot to worry about on this. Pretty straightforward scenario here on the gold. It's a bear market. I think we can all agree on that. It's also a range market as well. Now, when we have a bear market into a trading range, there are 3 basic patterns you want to keep in mind. There's always some nuances to these, and we'll cover those in more details tomorrow morning. But what you want to think about, though, whenever we have a range, 3 basic patterns. You've got a failure pattern and 2 breakout patterns. Now, remember, with a bear market, my goal is to sell above the range. What I'll do is I'll wait for the sellers. Well, they will eventually run out of ammunition down here. I'll wait for that pop up above the range. I always like to find a level of resistance up here, and we'll talk more about that in a moment. But the bottom line, though, is I want to get up above the top of that trading range. Get me out of the range. Then try to catch some buyers on the wrong side of it, right? Get those buyers to commit to buying off the pullback. Once they do, you know exactly where their stops are, and you can just sell right in their stop losses. It's a very, very simple pattern. And again, I like to incorporate a level of resistance up ahead, and I'll show you that here in a second. That's your bread and butter, right? When it comes to a bear market into a range, a buyer failure pattern above that range. Then we've already talked a lot about these already, the 2 breakout patterns. The 1, 2, 3 breakout, right? Which of course starts off with a strong move down, a pull back to the moving average, and jump off the moving average. That 1, 2, 3 breakout, mark the low, mark the high, and get short off the high of that channel. And I realize everybody wants to sell the top of that channel, right? The first breakout pullback. But I'll tell you right now, right? Breakout pullbacks are not as reliable as we wish they were. They're just not, right? A range is a range because it's balanced. We got to wait for that breakout, then we can sell the first test of that new channel. Or look for that strong breakdown, right? Strong breakdown, shallow pullback in price, lower low, and of course that trap high right above that high. That is another great setup we'll watch for tomorrow as well. Those are my 3 favorites whenever I have a bear market or trading range, right? It's that buyer failure above the range, it's the 1, 2, 3 breakout below the range, or the 2-try breakout with that trap, of course, as we go lower. So now, going back to my chart now, I can easily see the bear market. I can easily see the range, right? And maybe you call it a triangle, maybe you call it a rectangle. It's kind of all the same stuff, right? It's a balanced market. It's going sideways. That range will act as a magnet, right? So what you want to remember is you want to get to go up and bring it back down again. Now, one very important clue about this particular range is how narrow it is, right? That little clue there, right? Narrow. It's very narrow. Now, why is a narrow range an important clue? because it tells me that if I just simply try to get short just above the highs, there isn't a very good risk-reward ratio there. But if I get a nice deep pullback and then look for that failure, see how much better that risk-reward ratio is, right? The risk-reward ratio is so much better with a bigger breakout. So if you're taking notes right now, what you want to remember is narrow ranges require bigger breakouts to free up enough risk reward ratio, right? We have to put a little bit of a carrot on the stick, right? We got to put some meat on the bone, right, for those bears who want to get in. The bears are not going to want to sell a very shallow pullback, at least not usually, right? There's always a chance, right? Even a broken clock is right twice a day. There will always be an exception to that rule, but I'll tell you, your bread and butter on a range, on a narrow range, is get a couple what I call deviations outside of that range. You'll notice I've got that trading range, and all I did here was I took that range and I doubled it up. And that created that sell zone up overhead. So I said earlier, I want to find a level of resistance I can use here, right? You'll notice that area creates that resistance. I'm also lining up these lows up around the highs. That will be an area of resistance. And one thing I really like about this chart is you can grab that trend line off the low, bring it up around these highs here. Now, it could be there. It could be here. So, really, it's as long as I'm up in this area, really, this area is where I want to be. But what I'm doing is I'm using that trend line to kind of project up overhead of where I have kind of these hidden channels or hidden levels of resistance. So this whole area up here, right? That's the bottom line. This whole area up top here, around the top of the channel, up inside that 1903 area, that's where the good stuff, right, is probably going to be. So how do I trade this? Well, I've already mentioned this a couple times already. So quickly reviewing it here, I want to go up above the range. Again, relatively big breakout. I want to see buyers try to buy the pullback, and I look to sell right into those stop losses. Now, if we get the move lower, right? If we get the move lower, let's get this out of the way here real quickly, right? 1, 2, 3 breakdown, mark that low, mark that high, getting short off the high of that channel, or strong move down, shallow pullback, lower low, and a trap high from there, right? So those are my two favorite patterns as the market goes lower, or get me up, buyer failure, back down in, right? Buyer failure pattern. Now you can kind of see that plan come together here. Now there really isn't much of a snapback on this one because you'll notice what happened. The market didn't go very far on Monday, right? See what happened there? And see what happened anyways? They came right back to it to begin with. It's amazing how that Monday holiday creates that almost like a little bit of again, I call it a snapback, right? It's like a mulligan. They take it back and they look for a do-over, right? Very, very common after a holiday weekend or a Monday, kind of a half holiday on Monday. Now, one thing we haven't talked about here is how do we buy this market? What's the best way to buy it? Well, we got to be careful. Very, very bearish right now. Mentioned earlier, I'm not in the business of calling bottoms, right? I don't care what levels of support are down here. I still need to see a full-blown reversal here. My favorite way to do it is wait for that pop up, wait for that pullback to the moving average. If they hold that pullback and they jump, bingo. Now we get a bull market. I'm going to mark up that high. I'm going to mark up that low. Find that, what I call a hidden channel, right? Find that hidden channel, and we're buying off the low of that hidden channel. Remember, though, we're not trying to buy the first pullback, right? That's the one more likely to fail for us to get short on. Buy the second one, right? Or buy after we see proof of that reversal. Then, right, those highs at 1930, those become on our radar there. Stay away from the middle, right? We don't need to trade in the middle there. If the market keeps on going sideways, just wait for this puppy to bounce up. Wait for that, right? Wait for those buyers to fail, sell it back down. Or if the buyers hold it and they jump, there's your reversal. Find that new, right, the new channel, and then get aggressive off the low of that hidden channel. Really, really great opportunity here on the gold. We got 3 pretty straightforward patterns here to get short. We're looking for possibly a reversal tomorrow. We'll see, right? Only time will tell. And again, don't go trying to pick those bottoms here right now on this gold market. Looking great. Now all we need is a little bit more time overnight. We'll get a few more candlesticks and we'll put this plan together here for tomorrow. Speaking of tomorrow's trading session, I want to see you there right there with me. I'll put all the membership links you guys need in the description of this YouTube video. Don't be afraid to call the office if you have any questions along the way. I've got live chat on the left, live support on the right. If you want more information, don't forget, I'll put all the links you guys need in the description of the YouTube video, or pick up the phone and give me a call here in the office. I'll be more than happy to walk you through the registration process so you're not late for tomorrow morning's trading session. Guys and gals, as always, hope you guys had a fantastic weekend. Will we get that snapback? Will we get a reversal right for tomorrow? We'll wait and see here. Bottom line is, look forward to seeing you guys back here tomorrow night or tomorrow morning at the opening bell in our trade room. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.